The Union Budget isn't just a financial document. It's one of the biggest market-moving events for India's stock exchanges like the National Stock Exchange. And Budget 2026 clearly proved just how powerful it can be. Let's break it down. The first and most immediate impact comes from tax changes. In Budget 2026, the government increased the Securities Transaction Tax, STT, on futures and options. This single move triggered a sharp sell-off, with the market falling nearly 2% on budget day. Investors reacted instantly because higher taxes mean lower profitability for traders and reduced participation in derivatives. Second, market sentiment plays a huge role. Even before the budget was presented, markets turned volatile, showing uncertainty among investors. In fact, the Sensex and NIFTY saw sharp swings and one of the worst budget day performances in 6 years. Third, sector-specific announcements drive stock movements. Budget 2026 introduced strong allocations toward infrastructure, railways, and manufacturing, including initiatives like Semiconductor Mission 2.0. These announcements boosted stocks in related sectors, while others like metals and consumption lagged behind. Fourth, liquidity and trading volumes are directly impacted. With higher transaction taxes, analysts expect reduced activity in derivatives trading, which is a major contributor to volumes on the NSE. Lower volumes can affect earnings for brokers, exchanges, and even overall market liquidity. Fifth, investor expectations versus reality decide the direction. Markets often rally before the budget in anticipation of reforms. But if the actual announcements don't meet expectations, like lack of tax relief or incentives, markets tend to correct sharply. That's exactly what happened in 2026, where the absence of major positive triggers added to the sell-off. But here's the interesting part. The impact is often short-term. After the initial fall, markets partially recovered as investors reassessed the long-term growth story and picked fundamentally strong stocks. So what's the takeaway? The budget impacts the NSE through taxes, sentiment, sectoral push, and liquidity. But while the reaction is immediate, the real impact plays out over time. And in today's fast-moving markets, the budget is not just an announcement, it's a trigger for opportunity.